we would be remiss not acknowledge the phenomenal leadership of SNAM. So certainly thank you to Luca Passa and the entire team for their commitment. And that was certainly a hard act to follow, but we'll do our best here. And thanks to everyone for continuing to show commitment to these important topics over the course of the great agenda thus far today. So our job here is to discuss implementation from an investor perspective, a portfolio perspective, and try to complement all the content thus far in terms of what we all do in our day job. So we'll start with some brief introductions for the group. I'm Grover Burthey. I lead ESG portfolio management at PIMCO, and we'll go down the line here and then get into the content.
Thank you very much. I'm Mette Gahr, working as a climate investment analyst at Zurich Insurance, where I'm mainly overseeing climate risk modeling as well as our decarbonisation targets.
Hello everyone, so my name is Malika Takhtayeva. I work as a sustainable fixed income lead at BNP Paribas Asset Management. So it's a leading European asset manager, and with the recent acquisition, now we manage 1.6 trillion of euros, quite a big number, and then operate diversified investment portfolios across both liquid and alternative markets. Thank you.
Awesome. I'm Alison Kruse. Nice to see everyone. I'm on our sustainable solutions team out of the Americas region. So I sit within Bank of America's corporate and investment bank, and I always joke that I facilitate both capital and information between issuers and investors.
Hello everyone, so Angela Brusas, funding and investor relations at Nordic Investment Bank. NIB is an MDB situated in Helsinki, Finland, and we finance projects that enhance the environment and support the productivity in the region. I should also say that NIB has been in the principles work since the start, as many others here.
Excellent. So, Mette, let's perhaps start with you. From your perspective, how should investors really assess the progress, the impact that they're having from a decarbonization perspective in their fixed income portfolios? What do you do, and how has your experience been over the years?
Thank you very much. So I wanted to start off with saying that as a long-term investor and asset owner, our goal is not just to decarbonize our own portfolios, but rather finance the transition to a low-carbon economy. It's simply fundamental to our business activities, including investment management and underwriting. Portfolio emissions is in itself good for risk management, but not necessarily sufficient to drive the transition to a low-carbon economy. So instead, investors should really, in addition to that, look at climate investment solutions, but also track issuers' CapEx alignment to climate solutions, their transition plans, and also their use of proceeds, impact metrics such as CO2 avoided or renewable energy deployment. Because portfolio emissions itself, if you focus too much on that as an investor, you have a tendency of divesting from hard-to-abate sectors and high-emitting sectors, instead of staying there where the conversation matters, where you can influence them, where you can push them. If you optimize your portfolio just based on kind of how it looks best in terms of being low carbon, you don't optimize the society in terms of bringing that to a low carbon stage. If you just change ownership of a credit, it will not change anything fundamentally at corporate level. So we need to make sure that investors stay invested in hard-to-abate sectors to really have an influence. So if you would combine different activities, the best is to look at finance emissions from a risk point of view, engagement targets more from a change point of view, and climate solution targets more from an opportunity view. And when it comes to label bonds specifically, investors should insist on clear KPIs, ex-post reporting of CO2 avoided emissions, verifiability, And investors should also look at the readiness to transition of issuers in order to avoid carbon lock-ins.
Okay, so a combination of issuer level activity, which certainly follows some of the comments from SNAM, specific KPIs, targets, utilization of engagement, and we'll come back to that as well. Malika, would you largely agree with that, or what would you add to those comments?
Yes, fully agree with that. But then also we develop our proprietary methodology, and we leverage on the net zero investment framework. And we basically identify those transition leaders, also improvers and laggers. And we make sure that we provide this tool to our analysts and also portfolio managers to make sure that they also measure, assess, and look at the issuers' transition plans and make sure that everything is supported by the science-based data and also metrics. And we also incorporate this into this process that has this systemic risk assessment, but also we employ it in the target setting for us. So this is something that we do at the issuer level for all the issuers, but also we have also launched dedicated funds. So we have dedicated green bond and then social bond funds. And here we also, unfortunately, despite what we heard in the previous panel, we do follow the exclusion rules at the issuer level plus the exclusions at the instrument level. We just need to make sure that this is something that we follow to mitigate the reputational risk that we always face. So the reputational risk that needs to be implemented for us in all levels of the assessments. But yes, generally, I fully agree that the KPIs, the strong and credible KPIs, should really be the focus going forward.
So perhaps a follow-up there, Malika. You know, from whether it's in the context of the industry at large or asset managers specifically, would you say that the balance right now in the market is generally appropriate in terms of managing portfolio level metrics, decarbonization, types of reporting versus real world emissions reduction, real world decarbonization?
Well, yes and no. It's a work in progress. So something that we've been working on, and I don't know if we actually should go ahead and give the floor to Alison first about my favorite topic. I don't know, what would you like to?
I would say let's go for it now, sure, yes.
So shall I just move to the decarbonization and the metric?
Sure.
Okay, great. Thank you. So firstly, sadly I cannot see Nicholas here, but he left. But I would like to thank the ICMA Secretariat and also the EXCO members group for the work that, for the support that I've received over the last 2-3 years in actually providing the additional content and always, and also to show the importance of this metric. And it's great to see that it brings a smile to Nicholas's face, and also Aldo told me that I've actually built up my resilience for that, but yes, so it's a very good experience. But going back to the serious point, so the carbon footprint in investment for portfolios, it's actually become quite a centric metric for a lot of investors. So we would like to see the development of this data, and it's not going to be used by investors in the isolation. So this is something that this will be used in tandem with the other assessment levels and overall the net zero and the decarbonization levels of case studies that we can build, and then to provide the more credible approach and explanation. But we, especially for green bonds, and we could see that this data was missing, there's something that the absolute emissions data that was not providing us with the strengths to demonstrate this decarbonization of our portfolios and the net zero targets. So we have seen that even the labeling regulations, such as towards sustainability, was already prohibiting us from using a zero emissions as basically a a default footprint for green bonds. But at the same time, we couldn't really use the issuer level carbon footprint that is usually provided by, broken down by scopes, and then provided at the issue level. Basically, in our view, that it renders inefficient, renders this instrument to be inefficient and then also redundant. So basically, using the issuer level carbon footprint doesn't provide this importance and the reduction of emissions. So we can work with different data providers, of course, but also you could see that the estimation and the focus on the life cycle doesn't really provide us with the relevant metrics or the relevant data, and also the inconsistency and inaccuracy that investors could face. And overall, we also saw that issuers could actually have a more stronger alignment with the SFDR regulation that investors have to work with in terms of the relevance and the intensity metrics that we also need to provide. So I have joined the organization called the Partnership for Carbon Accounting Practices, called PCAF, together with PIMCO, with Samuel. Sadly, he's not here. But we've actually we've joined the working group, and we're working on the standardization of the methodology, not only for the carbon footprint for the use of proceeds structures, but also for the avoided emissions. So it was great to see that this time that it was published in December 2025, and this standardization actually even advocates and then makes a reference to ICMA's important role to mobilize the data, to create this data. So this was a very important point when Samuel and we decided to go back to the Secretariat and ask them to potentially allow us to elevate this metric from the other indicators into the core indicators, so that we could potentially see the development of this data. So finally, we're really happy to see that these elevations happened but sadly only for renewable energy and energy efficiency. Hopefully there will be some progress going forward, but also what was really great to see, and I know that Zurich, you're part of the Net Zero Asset Owner Alliance. They published the updated 5th edition of the target setting protocol and basically made the reference and asked all the signatories now report this data and really use the methodologies that have been set and written in the standards by PCAF for the use of proceeds structures. So we went through quite a long process, and yeah, so I'm really happy where we are now.
Yeah, thank you for highlighting the work of PCAF. As you mentioned, we at PIMCO, we've been part of the core team there for a couple of years. I don't know if it's been mentioned during the conversations yet today, but certainly a very helpful resource. And the broader group tried to be, really, I think, as objective as possible in terms of providing guidance to the market. And so hopefully a useful tool moving forward. But Alison, let's go to you. Effectively the same question, but from an underwriter perspective. And based on the observations, insight that you received both from existing or prospective issuers, as well as the buyers of these bonds, how do you currently see the balance or the discussion, maybe even the tension between portfolio level, bond level emissions related measurement and the real world decarbonization objectives?
Sure. So, I would say the investor perspective is valuable in terms of driving issuer behavior. And so the continued development, engagement, conversation, et cetera, has always been helpful to engage with issuers and for issuers to sort of better understand how their data is being utilized, because I think that, to me, that's a big hurdle when you're asking for additional data or additional public reporting, is to understand the end use case. No one wants to put work into something that goes to the internet and no one opens it or uses it, et cetera. And I think that's the balance that we're trying to strike here with portfolio or financed emissions decarbonization, which exists across financial institutions, the scope 3, if you will, of the financial space, which I know everyone has their own qualms with scope 3, regardless of what sector you're in, and the real world decarbonization, right? And we've made a lot of progress over the past couple years in terms of being able to address both. At the end of the day, an asset owner gets to decide how they want to leverage their own dollars and cents, and some prefer to see more real-world decarbonization. Others want to see decarbonization of their own portfolio, more input into darker green portfolios. And so I think just that understanding of the shades of green, if you will, from an issuer perspective, and knowing where they can play and what pockets of capital they have access to is important. Coming from the Americas region, sitting out of New York, I'm a bit encouraged by the conversations around inclusion, pragmatism in the market, trying to continue to expand the market and see more different issuers, more types of projects, investments, et cetera, because I do think we have a broad spectrum on the investor side, and we can satisfy different individuals.
Great. Okay, Angela, on the issuer side, Nordic Investment Bank is a proven, dedicated issuer. You've been really committed to this market over the years. So from the issuer perspective, what's been an effective market signal, an effective lever in terms of continuing to drive that focus internally, be able to represent what you're doing in the market? Would you prioritize or affiliate that with CapEx? Would it be the greenium, which has come up multiple times today? Engagement with investors, some combination of the above. What would you say has worked, and how has that part of the market evolved as you all have been active?
Thank you. So from an issuer perspective, it's not really just about one lever, but it's actually multiple levels, and these kind of support each other in order to get the best outcome when we talk about decarbonization, for example. So capital allocation is the foundation. We need to do that, and of course, being an issuer like NIB, that we are able to then finance projects with high impact. That's, of course, very important. But then to ensure the credibility, we also need to engage and also have frameworks. So, and the engagement we do, it's both to our lending customers, but then also with the investors. So when we have a dialogue with the lending customers, we of course need to agree that we have ambitious enough targets for them, that they are doing the right thing, and for this purpose we have different documents. It's the mandate framework, it's ESG guidelines, etc., etc. So that will help that dialogue with them. And then equally important is of course that we as an issuer, we can also communicate what our goal is. What is our intention, what will we finance, what will we not, and for that purpose you need the overarching documents like the sustainability policy and climate and nature strategy. And then again, if we turn over to the bond side, it's equally important for us to engage with the investors to hear out what they really want. And well, one obvious forum to do and have that discussion is of course the principles, where the issuers and the underwriters and the investors together come up with different guidelines, and especially for the reporting, which impact metrics should we use in order to demonstrate the impact we are going to do. As you have seen, we started out with the quite simple user-proceeded green bond, and we have come up with a lot of core metrics and supporting metrics over the year. These, I think, the fundamentals are still working very well, but from time to time it's maybe good to reflect on whether we need to adjust them, make some addition, etc. Then you also saw the picture from earlier. Today it's not just about green bonds, there are plenty of labeled bonds, and because of them we have then also needed to come up with new guidelines, new impact metrics, etc. All this, of course, we need to implement again as an issuer, and eventually we also need to go back to the lending customer to ask for more data, because without that data we are not able to report as we wanted. But you can see there's actually a straight line from the investor to the issuer to the lending customer. So if we can all support this engagement and with credible documents and allocate enough of capital, I think we will have a good outcome when it comes to the decarbonization. So these three are fundamental. You mentioned the pricing, benefits, the greenium. I think during the day we have already come to the conclusion, or maybe already 15 years ago, there is no real greenium. But anyway, for an issuer like NIB, this has never been the driving key aspects for us. For us, the key value is really that we get diversified supporting investors into our bonds.
I'd like to ask you, Mette, to continue on that point. You mentioned engagement in your response earlier. Just building on Angela's comments, how do you see practically engagement now play into this process? How has that changed potentially for you, or where do you see that going over the next several years?
So out of these three aspects that you mentioned, capital allocation, greenium, and engagement, I would say engagement in itself is the most impactful activity you can make. It's really where you can raise your voice, influence issuers or companies to make a change, and etc. One issue with engagement is that it's very resource intensive, so you can't rely on that alone. But it's an important pillar of the whole strategy. So I would say going to the other measures, capital allocation, it's powerful to move capital away from stranded assets into climate solution investments and create a market signal. However, it's not possible to do that for the entirety of a portfolio. And in terms of greenium, it's modest, it is a real factor, but I wouldn't necessarily see it as sufficient to change entire financial flows. So the best results, in my view, comes from combining these three matters, especially on engagement, have clear escalation procedures in case you're not successful in the first dialogue with the companies, and then use greeniums to scale green markets, of course.
Okay, let's go back to you, Angela. And you alluded to this a bit, but of course, the industry has long discussed and debated the additionality of any sort of label, really, and would appreciate your perspective in terms of, in the context of green labels, as well as additional labels in the market. Has the experience in NIB been that these structures, these frameworks, and the disclosure and effort around them has had a material impact on, let's say, additionality in financing assets, lending, overall activity that perhaps would or would not have taken place in the absence of the green bond market, of the labeled bond market?
You are correct that this question was also raised 15, 20 years ago, that why are we doing this? You would be financing these projects anyway. It's correct. I mean, if you have an environmental mandate, as we have as an issuer, for sure we will continue, we would have and we will continue to finance these kind of projects. But with the labeled bond market, we have really been able to raise awareness, to tell people what are we actually doing. And I think they are quite powerful, the labels. So you can really pick it up, and like we did a blue bond, you can focus on the water management and protection, for example, signaling, communicating something with the bonds. And then, as mentioned before, I think really with the labeled bonds, we have also become better at reporting. We have enhanced even more the transparency. There's a structure that we can really utilize in our business. And again, this is something that we can impact and affect our lending customers. And then when we see, the bigger and bigger support from dedicated investors, it will of course incentivize us as an issuer as well to continue doing what we are doing, bringing more green bonds, for example, to the market, and also incentivize our lending to seek for these good projects that we can finance. So, yeah, from our perspective.
I would agree. Over the last couple of years in particular, the expectations that we've seen at PIMCO from our own clients, even those who have been long-standing partners of ours in labeled bond investment, that they genuinely appreciate and do seek that additional information, right? And that helps them justify additional allocations to those funds and mandates. It helps them think about other markets to expand into, right? Many were early adopters in the investment grade market, and we want to bring them into high yield, into emerging markets, into a host of other parts of the market. And to some extent, the market needs to be careful not to take it for granted, right? That additional transparency and the direct connection of AUM really can drive continued growth, which should then lead to real world decarbonization. Has your experience been similar, Mette, or how would you perhaps add to that?
Yeah, so the label bond market is really effective to gain our attention. As an investor, it's just easy to find those bonds, create an impact within a climate solution framework in itself. Not all bonds are equally impactful, but as a market whole, it's a critical enabler to mobilize capital and really scale green assets. I would say label bonds, they add a lot of value by increasing transparency in the market, to create internal disciplines of issuers, yeah, and again, scale green assets generally in the market. In terms of decarbonization, we see rather a weak level of decarbonization in cases where maybe large corporates are using label bonds to refinance already planned capex. On the other hand, we see the most decarbonization where there's a tight definition of user proceeds, and where the bonds are first of its kind or transformative. Could be green hydrogen in steelmaking, but also if there's issuance in new regions such as emerging markets.
Malika, anything else to add?
Well, I think that with all these great investments in sustainability, we're still not addressing the elephant in the room, so that the companies that haven't been receiving enough attention and financing is basically this hard to abate and high emitting sectors. So I know that it's been the main topic probably of the conference, and the ICMA's role was also quite important in terms of how the transition bond has been developed. So hopefully this impact reporting element will be added to the guidelines for transition bonds, and the metrics will be developed. But we can see that it works really well for green bonds. That's why I really think that this is something that is missing currently for transition bonds, and it will be a strong support not only for issuers but also for investors. So that's why, yes, label bond is a very great fixed income instrument to provide this additional reporting disclosure, and overall it's utilized very well as a source or as an element of the engagement. So I fully echo and fully support that everyone said that we have such a great opportunity to improve and to develop the engagement further, especially with sovereign issuers. I think 15 years ago it wouldn't even be we wouldn't even imagine having this opportunity to engage with sovereign engagements. But now it's great to see that it's an ongoing dialogue, not just on a one-to-one basis, but also collaborative. So we have collaborative engagements that the investors basically get together and engage with issues with an impact and very strong additionality. Thanks.
Perfect. So transition finance, transition labels, transition guidance, this has been covered a good bit thus far today, but would like to also touch on the topic here as well. Of course, what we need now is actual issuance, actual activity. And while the market, I think we can all be patient in terms of really seeing some first movers here. Ultimately, the measure of success will be investable transactions. So Alison, what is the time frame you associate with this based on the conversations you had thus far? Do you expect, or are you optimistic that transition labels and even different types of sustainability-linked resurgence could see an uptick in issuance across geographies? And how do you see this potentially playing out over the next, let's say, 12 to 24 months?
Sure, easy question. I would say, obviously, the green bond has been the staple of the market historically. I personally don't think that's going anywhere, and that's probably a good thing. I think the additionality of the toolkit or additional options for issuers can help address, as Malika was saying, some of the hard-to-abate issuers, hard-to-abate projects, et cetera, that haven't really found a home in the green bond market, right? Like that was the catalyst for a lot of this guidance initially, and the hope is that we get more issuers, more projects, and an expansion of the market. I think you've heard it before, but it's the classic chicken and the egg problem. The catalyst for a lot of labeled bond issuance from issuers, in my experience, is that investor engagement, is investors saying that they have pockets of capital, asking for these types of issuances, and ultimately that can move an issuer over the line to do the work, put the framework, SPO in place, and come to market with a structure. I think we're still a little bit early in, obviously, the transition bonds, given the guidelines were just published at the end of last year, but even the sustainability-linked product hasn't found a large buyer base, if you will, on the buy side, and so that sort of hindered some of its issuance as well. So I wouldn't say, I think we will definitely see issuance, and more issuance in the market sort of will help get over that first mover or that kind of fear of what is transition, how can I define it, is there market precedents that I can leverage that a lot of green bond issuers get to use given there's other frameworks in the market that they can point to. But I would say that it'll take some time before it potentially becomes a larger part of the market.
Yes, I certainly agree with that. We at PIMCO are certainly open for business, so we can help with that. But part of what you said, which I wholeheartedly agree with, is if I were an issuer and I were considering this, you certainly want some degree of let's say de-risking on the execution side. And so as an industry, this has come up in different discussions. Whatever we can do to combat the perception that there's more downside risk in doing this than upside benefit will be critical over the coming quarters, coming years. Angela, NIB issued a landmark SLLB last year, Sustainability Loan Linked Bond, one that was quite innovative and hopefully can be a good precedent for others in the marketplace. Would love for you to walk us through the justification internally, the journey that you all were on for that, and then with the benefit of hindsight, your observations in terms of what went well or what you may do in the future as you consider that label in that market again.
Sure. So let me first suggest both to issuers and investors be a little bit more brave, come to the market and support also transition, which is really important. So, I mean, we had been issuing green bonds, the traditional use of proceed bonds, since 2011. And the decision we took back in the days was really that with that framework, we're going to focus on the so-called dark green projects. So it was never our intention to include something more that you would think of transitional. And that has worked out just fine. But it doesn't mean that NIB doesn't recognize that it's equally important to also finance transition. So just to complement our green bond framework, what we did was then to set up an SLLB framework, starting to issue these bonds where you have general corporate purpose bonds financing a pool of sustainability-linked loans. So, I mean, the product is very simple. It looks very much like a green bond. It's kind of a use of proceed bond with a fixed coupon, and you have all the risk on the issuer. But you are then not financing a pool of projects, but rather corporates, so a pool of loans. So this is our way at looking at the transition. And to be honest, to get the motivation to start doing this was, again, it was really the communication with investors. So discussing with some Swedish investors that we have seen you do the dark green projects, we really like it, but we also understand that transition is important. How can we support that? And as mentioned before, there are some issues with the SLBs. So that was not a suitable product for us, an issuer who is not financing our own business, but rather our lending clients. But with this product, they felt very comfortable to be involved again. So when we issued now the first SLLBs in last autumn, it was really with focus for the Swedish investors, and it was exactly the same dark green Swedish investors who have bought into our green bonds, who now was ready to buy into the SLLB. So, and of course what helps here is that we had then established the guidelines in the principles. And this was a work we did together with both underwriters, issuers, and also Loan Market Association. So there is a proper guidelines you can lean back on when you build up the framework. And then we of course also got the second opinion, just as we have for the green bond framework. We did the first issuance. After that, it has been somewhat slow. I would like it to pick up more, ready to issue more. But again, with all new things, it takes time, and you need to have the dialogue with the investors to get them comfortable to buy into this. And that we are trying to do with different calls and investor meetings and setups to get them comfortable. But this is our way of supporting transition. There are many ways. And as you were saying also with the climate transition bond, I mean, the thinking behind it was really to spur the market to get more issuance, have issuers feeling comfortable coming to the market with this product. So I hope it takes off, and of course also that the investors are there to support it.
Have you seen or heard other interest in SLLBs, Alison? Is this something that you think could potentially carve out a new lane and see some additional activity?
Well, I sit in the Americas region, so not as much out of the Americas, not so because of the backdrop, but more just the way the lending profile works for banks out of the Americas, not doing as much funded loans as banks out of Europe. So I'm probably not the best positioned to answer that. But I will say that, you know, innovators in the market like NIB are important to pave the path for others to follow, and to continue to, and this was also talked about when it comes to climate transition bonds, right? As there seems to be a preference from the market for issuers who are already well established or well understood in the market to bring the new label and kind of bring it credibility. And you can sort of understand why when we've heard investors throughout the course of the day talk about how both issuance and issuer level analysis is important to sort of come together and make an investment decision. And so, you know, I think that could be a big catalyst for the market as well.
Yeah, it's a fair observation. There's I think perhaps there was an argument when we embarked on the XCOM and the transition label initiative last year that the target issuer audience may be new issuers in terms of those who had not used the label. Let's bring in more. But the conversations we've had over the last 2 days have perhaps created an argument that the incumbents can take this on. They're the ones who have the resources, who have the muscle memory, the market credibility to do that, and perhaps they're the best target, right, for the first transition bonds. Maybe not the first, but let's say to gain momentum in the market, and so certainly something to watch. So, but Malika, and you know, curious from a true allocation perspective, a portfolio perspective. Where does this transition label sit in the context of decarbonization? Because there are naturally some real benefits, but also some hurdles and tensions.
Well, I think that's a very important question. And at the moment, investors are in a difficult position because we have to comply with the different levels of regulation. And it's great to see that despite with all the comments around it, that SFDR 2.0 well, hopefully will include this element of the transition. So potentially, and hopefully, with the European Commission reconsidering some topics around the exclusion levels, we will see this additional Article 7 been fully implemented and investors being able to allocate transition bonds or similar types of instruments to these pockets. So this is something that will really provide a clearer direction rather than just add more uncertainty in terms of if we should allocate the transition bond to more greener pockets or not, and whether this SFDR 8, Article 8 funds are able to include this, or we will potentially see a lot of investors just taking this label and looking at as just a conventional vanilla bond. That's what's been happening quite a lot to SLBs, unfortunately, and just allocating them to a non-thematic conventional fund. So in order to avoid this, hopefully we will see this development of the SFDR 2.2 and then giving us a more clear direction.
Mette, perhaps we can end with you on this topic. Where do you see transition bonds in terms of where's there a home for them? And from a real world emissions perspective, are you optimistic?
So definitely we are optimistic around this. We would be very interested in investing there, especially if it can lower emissions in the real world. We would have to be a bit careful and do a bit of double analysis at the beginning, both at the bond itself, but also at the issuer, to really understand whether this issuer is ready to transition. And we would do that in order to avoid any carbon lock-ins. But I definitely this in an optimistic direction, and we're very happy about this development.
Excellent. So if I were to summarize the comments here, general receptivity towards newer and additional labels, with the primary caveat being very, very systematic and thorough issuer level analysis and complementary frameworks and disclosures. Certainly, perhaps optimism about where the market will end up, but we have some uncertainty about the pathway there and the timing. Decent investor interest, albeit it will be mandate and perhaps geographically nuanced, but universally quite positive bias towards the fact that our investments, our activity, our issuance is having a real-world decarbonization impact, but of course the future is hopefully very bright. Thank you all.